All right, good morning, everyone. Thank you for joining today's Flood Talk webinar. My name is Crystal Fleischman. I'm the Marketing Manager for New England Excess Exchange. In today's webinar, we will be reviewing the best seasons to sell flood insurance, questions to ask your insureds, flood zones, elevation certificates, and available carriers, among other things. We have muted all participants, or we will ask that you mute yourself, and we will be recording this session. You are welcome to have your cameras on or off. After the presentation portion of this webinar, we will open for a Q&A. Please put your questions in the chat box, and we can answer them immediately following Diana's presentation. Before we get started, I would like to take a moment to introduce our organization. New England Excess Exchange is a managing general agency. We write in 11 states, including all of New England, New York, New Jersey, Maryland, Pennsylvania, and Ohio. In addition to private flood insurance, we write all commercial and personal lines of business, including but not limited to commercial general liability, transportation, professional liability, inland marine, property, homeowners, dwellings, comprehensive personal liability, and much more. You can visit our website at neee.com to obtain a quote or reach out to your NE underwriter directly. So next, I would like to introduce you to our presenter today. Her name is Diana Duke, and she is our Senior Flood Insurance Underwriter for all primary and excess lines of flood coverage. Diana began her financial services career as an assurance auditor for PricewaterhouseCoopers. In 2016, Diana joined New England Excess Exchange in our commercial lines department and has been underwriting for NEEE for the past 4 years. Diana began developing and enhancing our flood insurance program in 2018 and has grown the program substantially. She's truly our flood guru. So now I'm going to turn the time over to Diana. Take it away.
All right, thank you, Crystal. I appreciate all of those kind words, and thank you everybody for being here. I will try to hold back some of my enthusiasm, but really I can't. Flood is exciting for me, and I really like everything that we do here, so I'm hoping I can answer some questions that you guys might have, or basically just help you understand what we do here and how we can help you and work together to grow everyone's flood book. Crystal, I'm ready for the first slide if you're ready. So a quick breakdown of what we're going to go through. Crystal kind of touched on this. We're going to talk about when insureds shop for flood insurance, a few questions you can ask insureds that are coming to you for flood or even for homeowners and even some commercial property. These questions can basically enhance the things that you can offer them. We'll do a quick touch on flood zones and elevation certificates. We'll talk about some of the differences between private flood and the NFIP. We'll also talk about our programs and how you can get submissions to me and get quotes and servicing from me. And we'll talk briefly also about the multiple markets that we have. And then we'll definitely have time at the end for questions and start filling up that chat box. I'm pretty excited to answer any that you have that I can. So next slide. Thank you, Crystal. So first up is, when do insureds actually shop for flood? If they are buying a new home, if they're refinancing, or even if they're just changing their lender, and then of course seasonally. Your real estate agents in your area are definitely top people to pay attention to. When they're selling houses, you could be selling flood. When they're refinancing and looking for a new homeowner's policy, they could possibly need flood. Now, it's definitely easier to take someone who already has a flood policy and get a new one. That's definitely easier. But sometimes with a new home purchase, the prior owner didn't have to have insurance. So it's kind of catching them when they're doing a closing. So think about all the area, or all the different areas on this map actually kind of show. So in the green areas, primarily in spring is when they're buying and selling homes. Also in the purple areas, like they tend to focus more towards the later times of the year. And then of course us on the East Coast, we prefer fall when everything's the most pretty. So by keeping an eye on the trends of when houses are selling, or even when rates change in your local area, that's when they're shopping. But ultimately, the choice for flood insurance is either because it's required or because they're scared. So we'll get more into the different areas and how that would apply in a little bit. But because of those kind of two choices, either they're coming because you have them. It's okay to stay on that one. I'm kind of flowing into it anyway, Crystal. Because they're coming to you because of situational awareness, or they're scared they might be flooded or in their area, or some natural disaster has occurred nearby and they're worried. You can be that place for them. So when they get to you, a few things you get to ask, or by asking will actually make your job quicker and easier to get flood insurance, is, did the prior owner actually have flood insurance? If they did, it's much easier to rewrite that to a new owner than it is to start from scratch. It's not impossible. It can still be just as easy. But if someone already has one, as you know, switching a homeowners to a new homeowner, it's just easier. Now, not only do you want to know if they have a flood policy, but did they have any flood losses? Just because you don't have coverage for a flood doesn't mean you couldn't have had a flood loss. It just means you didn't get any help to support you during that time. And then the other third most important question that you can ask pretty much to anyone that's coming to you for some kind of property insurance is, did they have a completed elevation certificate? These aren't required, but sometimes they can be. So when do we actually see elevation certificates? For the most part, those appear for properties that were built after 1974, when, the NFIP's flood program actually came into existence. So a lot of building codes and state regulation and even federal regulation about how you build your home included a component of, you need to be protected against flood if you want to build in this area, because we already know it's flooded. We expect it will flood again. We've given you a hazard zone to describe that to you. So when you're building in those areas, builders are normally required to get an elevation certificate to prove that they're building it up to code. Now, another instance where you might find that is a home that may be pre-firm or before 1974. So let's just say 1950s home, that in the late 80s or 90s, they decided to renovate and add an addition. Now, that addition will have to be guarded and up to code for the flood standards of that time. So it's possible that an elevation certificate was completed in order to do that build. Now, basically, having these three bits of information or asking can either add to the coverage offerings that you can give. Let's say they had come for homeowners. By just asking these couple questions, you might also be able to tack a flood policy to what they're asking. At the same token, maybe they came to you directly for flood, and these are the best three questions to ask. And by having these tools in your pocket, it kind of makes you start to become the expert for that home. And that applies later too. So you're doing this policy now for a new owner. If in 2 years they sell that house and you're the person that did the flood policy, like, you have that insider information. It's going to be you that they're going to want to come to say, we need to write flood again for this new person. So just by asking these three pieces, like, you're building your own arsenal, building your own toolbox. All right, the next one, Crystal. So flood zones. Everyone here has probably heard about a variety of them. There's many. I could list them all for you, but I won't. For the most part, we have our special flood hazard zones, which we would expect to see. These are the highest risk areas of all of your A's, A with letters or A with numbers, it doesn't matter, and all of your V's or V's with numbers. Those are your highest risk areas. Then you have the more moderate risks, which fall into C and X zone unshaded. And those are also kind of included in that SFHA, the special hazard zones. But then you have these other pieces that are considered non-special flood hazard areas, which kind of pull in, and those are the C's and the X unshaded. So that's a lot of different zones. I apologize in advance. I didn't make them. But basically, if it rains where you live, you are in a flood zone. Some of them are considered more severe than others. Some communities participate in the NFIP because they are more severe, and then other places may not participate because they don't feel that their X shaded or X unshaded area is enough for them to want to participate in the standard flood. Now, Couple things to consider with that. So the other big piece of this slide is where the biggest loss is. On the right here, you'd see I have probably 20, 25 of the most recent storms and their impact and the total claims paid. The biggest standouts are going to be Hurricane Katrina. That's that big blue line towards the top. But then we also have Superstorm Sandy, and then we can even climb down to Hurricane Harvey that definitely had a significant impact along Texas and Louisiana and even parts of Florida. So why am I bringing that up here? Well, actually on the 31st of January, NFIP actually published their legacy totals of the losses that they've paid. And two things really stuck out for me on that. Since 1974, when the NFIP was established to date, $20 trillion in losses have come from X zones. Now, X zones are considered lower hazard. Our lenders don't require us to have insurance in these zones, but we have $20 trillion in losses in those areas. Now, that doesn't mean that they've paid them all, but what that means is someone had a claim in that area. If you didn't have flood insurance, no one's going to pay for that claim. Now, the opposite side of that is in the same timeline, we had 51 trillion in claims for all other zones. Now, that's about a third are in X zones, and then the rest fall into these places where we expect, and they're high hazard, and we know that they flooded and that they're going to continue to flood. So what that means is we should really be mindful of saying, oh, you're in an X zone, you don't need flood. Now, they may not be required, but that doesn't mean their risk has disappeared and that we shouldn't be letting them know it's something to consider. So you don't get to $20 trillion because a few people. You get to $20 trillion because a lot of people in X zones have been affected by flooding and some weren't prepared. But we can change that. So ready for the next slide. Thank you, Crystal. The next piece of this is elevation certificates. I know these are dreaded, but really they actually can help and give us a lot of information. What do they tell us? So elevation certificates tell us how high your house is built against what the NFIP believes is the highest chance of water in your area or base flood elevation. Now, there's different boxes on this, so I think I'm going to bring one up here towards the end of this slide. But knowing your BFE, knowing the elevation of your building, they also can let us know if there are engineered flood openings or if there were wash-away walls, or is this building built on pilings that are more secure than a foundation just resting on the ground. Pilings are drilled some 30 feet into the ground, so they're more sturdy and repel against water, so to speak. So elevation certificates are a person that came to your home and with their own tools did all of these measuring and evaluation. They've taken pictures and they've certified it in the certificate to say, here's what we know about this specific place. Now, I have plenty of tools that I can use to find out some of the same information, but it's going to be an estimate, drones that flew by and took elevation readings, or cumulative data that the NFIP and even some of the government and other people around the world really that have collected over time, and I can access that. But it's far better when there's a person on the ground doing their job, of narrowing it down to just this building. Mine is kind of a general space, gets us a good idea, but this is even better. And that's where they could sometimes help us. If your elevation certificate is able to say, this house is built higher than what you expect for flood, that's going to help you. It's going to help you with rate. It's going to help you with options for carriers. It's going to bring a lot more to the table. Now, if your elevation certificate doesn't show that it's positive, but it does show that there's flood openings or some of the other things I talked about, like washed away walls, that can still help you. Now, the last option is it's not going to help you because it's going to say what we might already know, that your house is negatively elevated against what they expect and you're at risk for flood, which that's why you're coming for flood, so it makes sense. Now, where can you find these? You can find these in a variety of places. Now, if one exists with the prior owner, I encourage you to look at sale documents or even anything that was filed with the town clerk. Sometimes these are included in packets, and kind of overlooked really, if flood wasn't required or necessary at the time of those purchases. Another thought that comes to mind is, I believe it's New Jersey that actually has an online repository, because they've had so much flooding and so much mitigation that they've had to do for flooding in so many different towns and boroughs in New Jersey. Like, there's an online place where you can find them. Now, the other big piece of this is elevation certificates are at a full cost to the insured. So we want to be mindful if we're saying, oh, get an elevation certificate, it's going to help. Let's try to make sure that it is. If this home was built pre-firm and nothing's been done to change it, there's a pretty good chance that elevation certificate isn't going to help them, and it's just going to cost them something. But at the same time, let's say that same house had some improvements and you know some things were changed. An elevation certificate might actually be beneficial and useful for them going forward. But it's really on an individual basis, and the price for these can range from $250 to $3,000, depending on where you live, and if you can find someone in your neighborhood willing to complete and do this process. So that's one part. Crystal, do you think I could share my screen? And I'll show you guys our elevation certificate if you don't mind. Let's see if I can.
Okay, I'm going to make you the host here. And I'm going to stop sharing.
All right, let's see if I can share. Sorry. All right, let's see. It says I can share my screen. This is the one I want to share. All right, thank you. So if you've not, most of us would not have completed them. The right people have to complete them, but you can find a blank copy of these online at the NFIP website. They are pretty easy to find. Comes with the instructions. But I just wanted to point out some of the important things that you can find that I did talk about. So for most homes that have a crawl space or some kind of enclosure that may not be a full basement, but it could be, the elevation certificate here in A8 is going to say, what do they have for space under there? Are there flood openings? How many are there? How much space do they cover? Were these engineered? So I think more of these came around back after Sandy, and a lot of homes that were rebuilt in New Jersey, when they built them up on these, I don't know, concrete blocks, they actually put in engineered openings to fill in, to one, let the water out, but two, by making them engineered flood openings, it says if the pressure gets too much on that space, the wall comes down, but not your home. So that's where the wash through walls part come through. Now, for me and the elevation parts of this elevation certificate, I'm looking for just a few specific things. So B9, this box right here, this tells us what the NFIP feels is the highest amount of water that could come up against your house. So let's pretend that says 10 so that we can put some numbers together. Sorry, this is a math class too. I didn't mean it. But then, so you have B9 up here where I came from, that number. We'll call it a 10. Excuse me. To down here is where people sometimes get confused. So this is the top of the bottom floor. So it's not the part you're standing on, it's the part above your head. So if you went into the basement or crawl space and there was 5 feet down there, you couldn't fully stand up. Some of you can, I can't. 5 feet. So what that tells me is when this number is a 5 and that number up there is a 10, it tells me you have 5 feet of floodwater exposure potential. Does that mean every time it floods, you're going to get 5 feet? It does not. But that kind of gives us a base level, hence the base flood elevation. It lets us know. Now, more commonly on higher zones outside of A, so like the VE zone, or a V zone specifically, this is when the cross member, so most VE zones, if you're building there now, you have to basically put pilings up, and there's a significant difference between when you walk up to the home and when you actually walk into the home, normally associated with 10 to 13 stairs that you have to walk up, and that's where this comes into play. So for this specific box, if I had a 10 up there and down here I had 14, that would tell me that they went 4 extra steps up your house to make sure all the water would flow under instead of through your home. Now, they don't math for you on here, but just having this completed bit, sending it to me, I can do that quick math in my head, My carriers already know what to look for, and if the right things are there, great. Some of you that have already worked with me probably know I've asked a few times. The other part that's on this elevation certificate is, where is all the machinery servicing your building? Now, here in Vermont, most of my stuff is not in the basement, but it's kind of like that sunken, dingy coal wood area, so there isn't any room for that. My heat and my tank's outside, but my heater's actually on my first floor. So if this were my house, it would say whatever the first floor elevation of my house is. So in this case, it would probably be about 9 feet. So my biggest exposure for most everyone else, if you have something in the basement, is all of the machines and equipment that operate your building. So your fuel tank, your water heater, HVAC, if that's down there. So you'll often hear from us, can you give us an estimate on what that is? And this is why we're asking. If that's all that's in your basement and your flood exposure is only in your basement, we just want to know what's down there so that we're making sure you have the right coverage for what you need. Now, I could probably do a whole hour on elevation certificates, but I will not bore you with that. But just know this tool can really benefit you and the insured, but not always. And I know that's like a half in, half out answer, but unfortunately, that's flood. And that's definitely something we come up against. I have plenty of carriers that will write without an elevation certificate. And I do have plenty of carriers that if you have it, they'll give you credit for it if it works, meaning it tells good news, or others that will only look if you do give them an elevation certificate. So by kind of putting that part together, that's what we're able to do. I'm going to go, since I have the screen, I'm going to go ahead and show one more thing that still fits in line here. I had mentioned earlier that I can tell you things that the elevation certificate's going to tell you. And this is one of those tools. Now, I just picked a spot here in Berry City, no one particular, so I won't even identify which building it is, but it's here in town. And I have the option to kind of pull up a significant amount of information about this risk. So I can tell you the building's elevation. This is the number that would appear in that bottom section of the elevation certificate. And then this is how high they think the water would be. So in this case, this building is positive 0.1 feet against the water, meaning their exposure is below, like the exposure is really that less because the way the building is built, they expect the water to pass by and not go through or in. Now, is that a guarantee? It's not. But that's just the NFIP's, how do I say that? It's like their guesstimate based on all of this data that kind of compiles into programs just like this, say this is what we believe, this is what we think is going to happen. But as we might have mentioned earlier, they aren't always right. So that happens, and that's why we have claims in like X zones. Crystal, I'm going to go ahead and stop share and push it back to you. Thank you for letting me drive for a minute.
Perfect.
It won't let me. How do I make it back to you?
Just right click on my video there.
It won't let me. Sorry, I'm technically challenged sometimes. My apologies. It won't let me click back to you. Maybe I have to find you in my list. Let's try that. More. Make the host. I found it. There we go. Thank you. Sorry about that.
Perfect. Now I have the power. Awesome. So you should see the presentation.
Thank you. And you can go on to the next slide. I appreciate it.
Thank you.
So a quick breakdown. How are we different? So in the most succinct that I could possibly say it, the NFIP gives you a couple boxes that you can choose from, this box or that box. With private flood insurance, not only my carriers, but all of the carriers, you have more of an a la carte type option. It's a menu. I need this and I need this, but I don't need that. Well, we can do that. We offer additional coverages outside of the NFIP, including business income and loss of use. I believe I even have some special earthquake or lava endorsement if you needed it. Some people do. But ultimately, the bigger differences come in how we treat flood. So the government, sure, they've been involved with NFIP and doing this for quite some time, but insurance has been around longer, frankly. So we kind of get what you need, and we understand the place where you're coming from and needing coverage for. So basically, as I said earlier, every building is in a flood zone. There isn't an unmapped spot in the United States, continental or otherwise. There isn't, because if it rains, it can flood. With our programs for private, you can get flood coverage in zones that aren't just the high risk A zones and the V zones. We definitely offer coverage for X zones because we know that there's been claims in X zones. Now, NFIP will do it as well, but their pricing may or may not be up your alley. Well, we get it. We understand that your risk is lower, but it doesn't mean that you wouldn't have any claims. And then the other big pieces are that for us, we want to give you what you need. With NFIP, they say, all right, here's your building limit, here's your contents limit, you should be good to go. Now, I want to know what you need. So if your building is worth $355,000, I'm not just going to say, here, take 250 as your limit and you should be good to go. I'm going to say, all right, we can do this. I want you to be fully covered. You want your insureds to be fully covered, but it's really up to them and their lender, should there be one. So we take them as separate decisions, but we also want to make sure we're giving you all of the same pieces if you want them to be together. The other part is private programs have been treating basement content slightly different. I have a variety of carriers that some give you full coverage in the basement, some are silent on where your contents are, some prefer to give you replacement cost on all of your contents only, but everyone kind of has their own need. If you don't have a basement, that part doesn't matter to you. So it wouldn't matter which carrier you went to. But if you do, and you have a finished basement, having options for that is important. And pretty much all of ours are replacement costs. And I believe with the NFIP, it's mostly ACV, unless you are able to work some extra magic in there. So, and sure, I'm sure they could do that. The other piece with ours is that if you have a claim, you reach out, we take care of it. You don't need a declaration of some disaster to try to get some help for a loss that's in your area, which struggling with FEMA type claims and losses is it's a big hardship. Now with us, you send me your claim, we have a whole team out here that help process that, take care of it, and we service it for you, and we help you get back to right as best that we can. And then I think the last big piece that's different, because we do offer things like business income, loss of use, and rental value, we might ask you a few more questions, but really it's to make sure that if this is your second home that you rent out and, God forbid there is something that happens or a loss comes, that you are covered as fully as you can be. Not being able to get that coverage with the NFIP is kind of their limitation, but we've been offering business income in the insurance industry for quite some time. So we feel like we have a pretty good handle on that. So basically what I'm saying is, hey, if you like the NFIP and you have your write your own program, that might be great, but you also might be missing out on same or better quality coverage, better rates, and faster and better service. So I'm the person on the other end. When you send an email to New England Excess in regard to flood, no matter who you send it to, it's going to come to my desk. And I'm pretty sure as a whole team here, we all want to make sure you're getting the best service that you can get, but that that it's us giving it to you. So you don't have to wait in line. You don't have to call a number. Send me an email and I'm going to come right back to you. So that's definitely a big difference between private and NFIP is the service you're getting. You're not just a number to us. Many of you agents that I can see on there, we've talked, we email pretty quickly, and my life isn't just limited to the hours that I work. Some of you I've talked to at like 9 or 10 at night, and that's okay, because that's what I'm here for, is to be that person for you. So when you think about private flood and NFIP, just start thinking outside the box. You learning more about flood and you engaging us in private market, like that just makes you more of an expert, and it could be you in this seat, but when you're talking to your own insureds. And by having that, I don't know, that good, for me, it's a great feeling to know that I know the product that I'm selling and the people I'm selling to. So when you have that feeling, you do better, you feel better, and you ask better and more questions. So let's try to work on that together. So I'm here for you for that end. The next slide, if you don't mind, Crystal. So I kind of touched on some of them. Will you flash forward just one page or one more click for me, Crystal? And so we have plenty of carriers. I'm going to say the large percentage will end up on some kind of cool Lloyd's paper, but every program is different. They have different underwriting guidelines. They have different wants. They have different declines. They have different things that they bring to the table. Here at New England Excess, I think what we've been trying to do was build a good arsenal of every kind of market so that we didn't have to say no. I hate saying no, but I have to do it sometimes because some market will say yes to it or no. And that's kind of the same limbo I know that you're in. Now, the NFIP might say yes most of the time, but it may not be what's best for the insured, and it may not be what's best for the risk itself. So just know that I have plenty of these, and 2 of these are actually multiple markets because they're brokerage and they go out to their people and then push something back to me. So it was our way to kind of fill our bag. So if you wouldn't mind going back just one more, go back one for me, Crystal, I appreciate it. So we have plenty of choices. The beauty of what we do here is your part in this is a single application. I believe that it was included before, but I'm sure we'll send it to you again, or it is on our website. One simple page application that I can use with all of those carriers to get you a quote and figure out where and what you need to be. And I do that for everyone. Now, if I get a submission from you, that's basically what I'm promising to do, is that I'm checking with everyone. I might come back to you with 2 or 3 quotes because they have little subtle differences. And I want you to have the option to give the insured the option. That's what I'm here for. I want to make sure that you, that you can give your best options to the insured, because it's a good reflection on you for them to know that this isn't the only box I can give you. You have a choice, but here's why they're different. And I want to empower you to be able to do that. And I know some of you have called and we've talked it through. I'm happy to do that with anyone at any time, because I want to empower you to know more and understand more about private flood, because it's definitely taking on a life of its own. Now, all of our policies do meet the private definition for flood. So all lenders, with the exception of the FHA loans, which is the federal loans, want you to get their federal program because they're kind of a team. Now, outside of them, no lender should be able to refuse our policies because we do meet the definition. It's on our binders, it's on our quotes now, it's on our policies. And I have definitely filled out for some of you a lender review for whether it meets the definition. So I can definitely say that that's a thing. We thought about that. We come to the table prepared for that. So I guess the last piece of this slide is, how long does it take to get a policy? Well, it honestly just depends. So for the most part, with the in-house authority that I have, if you send me a bind order at 10 o'clock and you tell me you need it by 10:15, I'm gonna get that to you because I can. Now, at the same time, if it's one that I have to say send to London, I'm kind of at their mercy. But I found other ways to make it so I can give a binder right away because lenders are what they are and they push on you. So I know that I want to be able to give you what you need. So pretty quick, I have to say, that's how long it takes to get a policy from us. But really the quoting, I want it to be fast and thorough. Sometimes you have to make 50 changes. I'm here for that. You send it, I will make them. I will not be disgruntled. I will not be worried. And I will not be like, oh, this is the 20th change. I get it. The whole point is I want your insureds to get what they need, what they want, and makes everybody, their lender included, happy in that timeline. So I'm here for that. So pretty quick. That's what I think. Maybe somebody that I haven't worked with yet, you don't know that, but I'm happy to prove that to you and just give me a chance. So I think, Crystal, if you wouldn't mind flipping, again, just a quick, these are some of the markets that we have, and just know that I'm checking everyone. And even if it's a policy that we've had for a few years, every year when we add a new market, I'm already thinking about, should you stay here or do you belong with someone better to meet your needs, meet your premium goals, and ultimately try to get you the best possible coverage. And I think that's that for that slide. All right, here's the part that I've been waiting for. Does anyone have any questions that I can help answer? I will push this back to Crystal, who I believe was manning that chat box for me this whole time, which I appreciate, and let me know how I can help.
You got it. We don't have a ton of questions. I have a couple that I'm going to ask. I would encourage anyone who has additional questions. There's no question too complex or too simple. Please throw them in the chat. But I'll start out with the first question. Is, for the elevation, are we still using FEMA maps for banking, or are they state maps?
So that's complicated. It depends. So I know with mine, like the one that I pulled up, it's got state maps, it's got FEMA maps, it's got hundreds of years worth of government data that's like finally public, that was kind of combined into making these, this, I don't even know what you really call it. I guess it's like an AI for elevation. So it's taken so much data to get to all the different platforms that are out there. That's one that I use, but there are many. I think when you're used with a bank that's requiring you to get NFIP, they're only looking at NFIP maps. Now, a bank that's open to others is going to take the maps that we send back. I think some of you, I might have sent actually that report that I showed from our Insight Pro, which is one of the ones that we use for elevation. I've sent that to you to give to your lender. Be like, this is what we know. And I didn't hear from them again, but we bound the policy. So I feel like everything was okay with the lender. So it really just depends. And you can ask your lender that question. Whenever possible, ask them the question. And if they're saying, oh, we're using this, then we can take a different look or look at it in a different way.
Thank you. And more questions flooded through. So thank you so much, pun intended. Now, we may have touched on this a little bit, but this is, a really great kind of direct question. Do we write with the NFIP, or are we just private?
So we do not write with the NFIP. So it's all just private carriers.
Perfect. Yep. And then are detached garages included on flood policies?
Ooh, detached, it depends. So when I have a home and it fits, like say one of my in-house programs, those are the best to use an example. If you have a house that's worth 250 and you have an attached garage or a detached garage that's worth 25,000, we're going to write it as a second building on that same policy because it's on the same land and we want to make sure that you're covered. And we'll ask slightly different questions of a garage that may not have like, it may look different than your home and how that's built, but we can definitely put those together without issue.
Perfect. So someone had mentioned that FEMA 2.0 rates are coming out in October of this year. Are the carriers and companies we're using also changing our rates?
So I'm happy to say we're into March now, and I don't expect any changes from any of the carriers that I work with. But I can say we're all aware that they are about to blow up their own NFIP program with the 12 to 26% rate increases, depending on where you are. They're also dropping off more people that were grandfathered in, which grandfathering means, if you're not aware, that the NFIP originally said your house was in an A zone. Well, now 20, 30 years later, it's in a V zone and they're only charging you the X rate. Well, they're getting rid of that because what they found is, we talked about 70 trillion in claims that they've had. They didn't necessarily collect enough premium originally, and now they're putting themselves in a hard spot. A VE zone costs more than an X zone, without a doubt. Now, for our carriers, we feel confident and comfortable in the rates that we're already using. As some of you who have worked with me, we often ask you, do you have a competing quote? Do you have a renewal with the NFIP? If you do, my carriers want to compete. Now, they have their standard rates that they're going to use, but if you have a quote already, they want your business. So if you send that to me, what it's going to do is I'm now going to be able to get more credit to win this for you, bring down the premium, give you a better quality product, and give you me for servicing and all of New England excess.
Thank you. So we have someone that would like to know if there's a workaround regarding the FHA mortgage. Is there a document that could be provided to get an FHA FHA mortgagee to accept the private flood policy over a FEMA-based policy?
Sometimes, yes. So I haven't yet determined whether it's a specific paper or if it's a certain like area that's processing a loan, but I've had some that have accepted our policies. I had to fill out a sheet that they sent over and I had to check off boxes. I had to provide copies of our policy forms and say, we're meeting the definition. We're offering broader or better coverage than what NFIP was. And we've had success. Now, it was a hard battle. I don't mind doing it. I will do it every time. But I feel bad if we do all of that work and then the lender's like, yeah, no. I wish I could say I had more push with lenders, but I'm extremely accommodating to them on purpose because they're really what causes some of our ruffles with flood sometimes, or the ripples. That would have been a better flood pun. So for me, the answer is yes sometimes, but it really depends. So I think I've had success with that in Connecticut and Massachusetts, but I have not had success in Vermont and New Hampshire in regard to FHA loans.
Thank you. And then this is the final question. If you have questions, please put them in the chat to make sure that we answer them. The final question that I have right now is how do private companies feel about personal property in the basement? Is it covered?
So again, I talked a little bit about this. It depends on the carrier. So I have many carriers that are silent. They don't care where your contents are. Their contents, we cover it. Then we have some carriers that say, we don't like the basement stuff, so we're going to limit it to this much of basement contents at RCD. Then I have other carriers still that say, wherever your property is, you tell me what you need for a limit and it's covered. So really it's kind of flexible. So I don't know if that really answers it, but depending on the policy. And if that's a question that you have, ask me and I will pull up the form and I'll say, this is what this one feels, or but this carrier offers this. And that's where sometimes I'm sending you more than one quote. It's not to confuse or dilute. It's to say, you're getting this with this one, but this one doesn't have that, but it may not matter to you. Like, depending on if you have a real basement or a finished basement or a crawl space, or even just some weird opening. If there's nothing in there, then you don't really care to pay extra or to move to this carrier because you don't have contents you're worried about. But if you do, we have carriers that kind of cater exactly to that. Like if I had a finished basement and I had nice stuff down there, I'd want to know it was covered because that's the first part that's going to get wet in a flood, without a doubt. So that's why those kind of options are important. And that's why we picked up so many different carriers over the last few years to make sure we're not having any gaps in things for that. You said that was the last question, but I just wanted to briefly sum and push back. Like, these are important things to remember. As insurance agents, and even me as an underwriter on this end, you basically are a first stop for an insured, as you know. They don't often know what they need. They don't often know what they want, really. But by just asking a couple extra questions, you could find that you become their person. And when you first take on a flood policy that maybe no one had one before or whatever, you become the expert of that location. It's basically personal branding for yourself. Like, I know the flood risk here. I know how I can get you coverage. I know what we need to do to get you coverage. And like, that becomes you. Like, you are that point person. And the more you know, as I've learned over these past 4 years, the more you know, the more people want to know from you. Now, I know we call me an expert here. I am our guru, but I'm still learning things every day because things change with flood, just as insurance changes for every type of market and product. It changes all the time. So I'm open to learning all the new. I try to pay attention to different changes, or if I find a hole in what we're offering, I go right to the leadership here and I'm like, we can't, I need something to say yes here. And as a company, we always want to make sure we're giving you and offering you everything that you could need to the best of our ability. I know sometimes I have to say no, I don't like it, but sometimes we do. Sometimes it's just not a fit for the carriers we have right now. But I'm always looking for more or expanding, so we drop any gaps. Thank you, Crystal. I appreciate it.
You bet. Yeah, we do have actually 3 more questions. Are you open to Further questions? Okay.
Ready?
So we talked about the basements. How do our companies compare to CAT coverage or NCIP? You know, do we have the same restrictions if we had a loss, if there was a loss in the past? You know, is that insured still eligible?
So it's okay if you have a loss. Do all my carriers like losses? No, but do most insurance companies? No. However, just because you had a loss doesn't mean you can't get flood coverage in the private market. It actually means the opposite. It means we're going to ask you some more questions and see if we can still do it. Now, we might say, you had a flood, what did you do to mitigate it? And sometimes maybe it was that act of God or a flood that never was supposed to occur or a dam that broke that shouldn't have. Like sometimes you don't have something you can mitigate. But then there's others where you do. And anything you do to help protect against future flooding is to your benefit. And, working in excess and surplus lines, claims are a thing. We know there's claims. I just told you guys about $70 trillion worth of claims through the NFIP. So I think if I'm summing back up to myself, you can still get coverage with a loss, but you need to know as much as you can about it. And now a new purchase person whose home before they bought it had flooded, it's not on you, the new person. If you know it, it's only going to help you because then it says this carrier might already know you had a loss or whatever. Knowing is just the power. But at the same time, if you don't know, that also can be kind of a powerful sit spot. If you're a new owner and it never flooded while you had it, you're a new person to the rodeo. So you get to have your own quote and your own policy. But if you do know, it's going to help you to kind of push that forward. Hope that answers that.
Perfect. Excuse me. So if a flood claim has been made, how has this impacted coverage rates with our companies? And then kind of a follow-up to that is if someone is in an SHFA loan, can they get coverage from most of our companies?
So if they're in a special flood hazard zone, that means A, V, X, any letter, you can get coverage through us. Sometimes where the hiccup is if you're in a place that your community doesn't participate in the NFIP or the FEMA's flood policies, then we might not be able to. Some carriers will consider it, but they're very, very picky. So non-participating communities, those are a hard sell, but it's not impossible. I've just had very little success. I think the other part of that question was if a loss was made or a claim was made. So just as with any other insurance, it might affect the rate. I haven't seen that as a result of any claims that we've had, but it's not all at my discretion. So we have some internal markets that I talk about that, I get to come to the table and say, I don't know if that's how we want things to go, but I'm not the final end all be all. But I don't think that if you had a claim in a policy period that you should worry that your renewal is going to go up. I know that NFIP does that. They also have like some repetitive losses tagline that they give certain policies that do to kind of red letter mark them. But we don't do that. I think our rate increases you would normally see on a couple-year basis, but again, I can't really say what every carrier will do. I just feel pretty good and confident in the rates that we have right now this year. And I don't think any claims that we've had have changed or impacted how the rating went for those policies. I don't know if that answers that, but I hope it did.
Perfect. So I am not seeing any other questions. So we are going to close out this webinar. I want to thank Diana and thank all of our attendees for joining us today. If you have questions about today's webinar or New England Excess Exchange, please don't hesitate to reach out to us. You can email marketing@neee.com or you can call 1-800-548-4301. You can also learn more about us on our website at neee.com. We will send a copy of this recorded webinar and the slide deck for those that would like to review the information or pass it on to a colleague. So with that said, thank you so much for joining us and have a wonderful day.
Thank you.